Welcome back to the deep dive. Today, we're doing something a bit special, a focused midday performance check-in.
That's right. We're aiming to cut through some of the noise you get mid-session.
Exactly. And we're digging into the top 40 high-volume stocks as of 12 p.m. Central Time, Tuesday, November 4th.
And crucially, this analysis is powered purely by the AI insights from the IntelliTraders team, and we're weaving in key market news headlines as context.
So let's set the scene first. The overall market climate, it's looking pretty rough out there.
Indices are definitely feeling the pressure. The S&P 500 SPX is down about 0.99%.
Okay.
The Dow, DOWI, is lagging too, down 0.58%.
And the NASDAQ IUXX.
That's getting hit hardest, down about 1.59%. Big tech weakness is definitely a theme.
Yeah, the headlines really echo that. We're seeing things like stocks pressured amid valuation concerns and losses for big tech pull Wall Street lower. Pretty clear message.
It is. But our job today isn't just to report those index moves. We want to use the AI data to see what's happening underneath.
Right. We're talking about those specific metrics. Pre-market, true value, daily true value, gap status, the buyer-seller direction.
Volume ratio, the 200-day moving averages. We want to distill what these numbers are telling us about where momentum really is.
Okay, before we jump into specific stocks, maybe we should quickly define one of the key metrics we'll be mentioning a lot. Daily true value. When the AI says a stock is like 99% overvalue, what does that actually mean in this context?
Good point. Yeah, that's essential. Daily true value compares the current price to its own history, specifically how it's behaved during previous price contractions, or you could say squeezes.
So it's looking back at consolidation periods.
Exactly. If it flags 99% overvalue, it means today's price is extremely high compared to where it typically consolidates after a run-up based on its own historical patterns. It's the AI essentially saying, hey, this looks technically stretched or rich right now.
Got it. That context is super helpful. Okay, let's dive in. Section 1. Volume leaders and sentiment extremes. Where's the biggest action at midday?
Top of the list, volume-wise, is SQQQ. That's the ProShares Ultra Pro Short QQQ ETF. Trading at $13.66 with massive volume, 114.7 million shares already.
Wow. A short ETF leading the charge. Makes sense with the NASDAQ down, I guess.
It does. But the AI data shows some complexity. It gapped up, as you expect. But the true value is mixed. It's flagged as 13% undervalue on the daily time frame.
Undervalue. For a short ETF that's up, how does that work?
Well, remember the definition based on its own history of price contractions for this instrument. The current level is actually low. But on the 1-hour chart of the immediate time frame, it's showing 5% overvalue.
So long-term cheap according to its historical squeeze patterns, but short-term maybe a bit extended.
Precisely. And look at the directional flow. Daily buyer up and hourly buyer up. That gives it an M trend, a medium trend signal. Buyers are consistently stepping in.
And the volume, 99% of yesterday's total already traded. That's huge commitment.
Serious conviction on the short side, yeah. Now, number 2 on the volume list is completely different. Pfizer, PFE, trade around $24.39, volume at 103.1 million.
Okay, a big pharma name. What's the technical picture there?
The key thing, it's trading below its 200-day moving average. That's a more cautious long-term signal.
And this is where the news ties in directly, right?
Absolutely. The AI data shows a seller down buyer downflow. The implied volatility rank is 30% downward, suggesting options traders expect less volatility going forward, maybe pricing in the bad news.
And that bad news is pretty significant. COVID-19 vaccine sales tumbled 25%.
Right. And then there's competitor news. Novo Nordisk hiking a bid for Metsera, which puts them in more direct competition with Pfizer in certain areas.
So the metrics, the seller flow, the position below the 200 MA, they really reflect that negative news flow.
Perfectly. Now let's pivot to the stocks really driving that NASDAQ anxiety. Big tech. Look at NVIDIA, NVDA. Huge volume, 102.2 million shares, trading around $200.40.
Okay, NVDA. Still a market leader in many ways. What's the AI showing?
Well, it's above both its 200-day moving averages, daily and hourly. That suggests underlying strength. Structurally,
Sense a but coming.
there's a big but. The daily true value, a staggering 99% overvalue.
99%. So based on its historical consolidation patterns, the AI sees it as extremely rich.
Extremely. Yet here's the twist. On the 1-hour true value, it's actually flagged as 3% undervalue.
Wait, hang on. 99% overvalue daily, but 3% undervalue hourly. How does that even happen? Is that just the intraday drop making it look cheap temporarily?
That's exactly what it implies. The AI sees the long-term picture as incredibly stretched, technically overbought based on historical norms. But the selling today, within the last hour or so, has been so sharp that relative to just that very short time frame, the price is pulled back enough to register as slightly cheap.
Wow, so it's like a massive technical tug-of-war. Long-term richness versus a sharp, short-term pullback, creating a potential bounce opportunity.
That's the dynamic. It signals incredible tension. If those hourly sellers ease up, you could see a really sharp snapback, maybe short covering later today. Huge divergence.
Fascinating. Now, compare that to Tesla, TSLA. Volume is lower, 48.7 million, price around $450.06.
Tesla's valuation picture is much less extreme. Only 2% overvalue on the daily, 6% overvalue on the 1 hour. Much more contained.
And the news context there is about a major investor planning to vote against Musk's pay package, right?
Correct. That's the headline noise. The directional flow is mixed. Buyer up on the daily, but buyer down on the hourly, leading to an M trend, medium trend. It's choppy, a battleground, but lacks that extreme technical divergence we see in NVDA.
Okay, let's shift gears slightly. Moving from sheer volume to, let's say, market nervousness volatility signals, where are we seeing really high implied volatility ranks?
Yeah, the IV rank tells us how current implied volatility compares to its own range over the past year. High rank means the options market is pricing in big potential moves.
And the leaders are?
UVX is way up there, 154% downward ranking. And CIFR, cipher mining, is at 137% downward.
UVX, that's the 2x long VIX futures ETF. So a bet on volatility increasing? What's the technical flow look like there?
It's really interesting. Unlike the broad market, the flow in UVX is strongly bullish. Volume is intense, 119% of yesterday's total.
Already surpassed yesterday's volume.
Easily. And the direction is consistently buyer up on both daily and hourly time frames. That gives it an H trend, a high trend signal from the AI.
H trend, that means high conviction, right? Strong confirmation across time forms.
Exactly. Buyers are aggressively piling into this volatility hedge, betting the market chop continues or gets worse.
That conviction buying in UDX is kind of the mirror image of the selling pressure elsewhere. Now, what about the crypto-related stuff? We see heavy trading in IBIT, BITO, CIFR.
Right, the crypto corner is active. IBIT and BITO, the Bitcoin ETFs, are showing the opposite of NVDA's valuation picture. They look deeply undervalued based on the AI's true value.
How undervalued?
IBIT is showing 10% daily undervalue and 15% 1-hour undervalue. BITO is even more compressed, 25% daily undervalue and 20% 1-hour undervalue.
Okay, so significantly cheap relative to the recent historical price contractions.
Very. And technically, they both gapped down today and are trading below their 200-day moving averages. So the trend context is negative.
And this comes amidst news headlines like Bitcoin's weekly structure shows signs of a failed auction.
Precisely. And also news that Jane Street is reportedly buying up stock in cipher mining, CIFR, which explains some of its high volume and IV rank.
So for IBIT and BITO, it's negative news, negative trend, but the AI sees the price as technically very squeezed down. Potential for a mean reversion bounce, maybe?
That's what the undervalue metric suggests, yes. A lot of technical compression, even if the backdrop is weak.
We should also quickly mention the stocks the AI specifically flagged for unusual activity.
Yes, good call. The system highlighted ETHA, T, that's AT&T, BAAO again, and HYG, the high-yield corporate bond ETF.
Unusual activity flags, those are often worth digging into later for specific catalysts, right? Something non-typical driving the flow.
Definitely. Could be news, could be large institutional trades, something outside the normal pattern.
Okay, let's pivot back to that true value metric, focusing on the absolute extremes. This really highlights the market distortions. Biggest overvalue daily.
Number 1 is RGTI, Rigetti Computing. It's showing a mind-boggling 145% overvalue.
145%. I mean, that almost breaks the scale. How does a stock get that high on this metric?
It's an extreme outlier. It means the price is trading almost 1.5 times higher than its typical historical consolidation level after run-ups.
Yeah.
Often driven by very specific news, maybe low-float dynamics, something overriding the usual technical behavior.
Right. And following Rigetti.
We have NVDA, which we discussed at 99% overvalue. Then SOXL, the Semiconductor Bull 3X ETF at 69%. And CIFR, cipher mining again at 70% overvalue.
Seeing a theme there, tech, semis, crypto mining, lots of volatile areas showing that high valuation pressure according to the AI.
Definitely. Now, on the flip side, the most undervalued stocks daily, where the AI sees the biggest squeeze downwards.
Yeah, who's looking technically cheapest based on past contractions?
ETHA leads that list at 34% undervalue. Then you have NCLH, Norwegian Cruise Line Holdings, at 31% undervalue, and Hims & Hers Health, at 27% undervalue.
Interesting mix. Cruise lines, telehealth. These are areas where the AI sees prices as significantly compressed relative to their own recent history, potential bounce candidates based purely on that technical squeeze.
That's the interpretation. Now, let's layer in the directional flow analysis, the buyer-seller direction. We want to see where the conviction lies.
We already mentioned Squick QQ and UVX showing strong, consistent buying. Buyer up daily, buyer up hourly.
Right. But another big name showing that same consistent buying flow, and importantly flagged with an H-trend, high trend, is PLTR, Palantir.
Palantir showing an H trend on the buy side, that's notable, especially on a day like today.
It is. Its volume is solid too, 97% of the previous day's total. Suggests real commitment from buyers, a strong belief in the stock's technical setup despite the market weakness.
But it's not all clear conviction. We also see mixed signals, right? Conflicting flows between the daily and hourly charts.
Absolutely. That's where you see the real battlegrounds. Look at Intel, INTC. The flow is buyer down daily, but seller up hourly. And it still gets an H-trend signal.
Buyer down daily, seller up hourly. How does that work? Daily sellers are pushing down, but hourly? Wait, seller up means sellers are active, but the price is moving up.
Ah, good catch. Let me recheck that data point. Apologies. For INTC, the source actually shows buyer down daily, seller up hourly with an H-trend. Let me reread that flow. Okay, my mistake in reading the notes earlier. INTC is listed as buyer down, seller up, H-trend. F Forward is also buyer down, seller up, H-trend.
Okay, buyer down, seller up. So the longer-term daily signal suggests selling pressure, but the hourly chart shows sellers are active, yet the price is actually moving up during that hour. That sounds like short covering or buyers absorbing strong selling.
Exactly. It's a sign of a fierce fight. The daily trend indicates sellers have been in control, but right now on the hourly chart, sellers are trying to push it down. Seller up, but they're failing, and the price is actually rising against that selling pressure. That often points to absorption or shorts getting squeezed, hence the H-trend indicating a strong, albeit conflicted, move.
That makes more sense, a real tug of war. What about AMD?
AMD shows buyer down, daily buyer up hourly, also with an H-trend.
Okay, that's clear. Daily sellers are still the dominant longer-term force, buyer down, but the immediate hourly action shows strong buying pressure coming in, buyer up. Again, a conflict suggesting volatility.
Precisely. These mixed signals with H-trends often mean choppy price action is likely to continue as these forces battle it out.
This is really granular stuff. Just a quick reminder for everyone listening, if you are enjoying these kinds of insights, make sure to hit that follow button and turn on notifications. That way you'll be the first to get our market analysis update every day.
Definitely. Okay, let's look at some broader technical benchmarks now. Section 4, market breadth and technicals. How did stocks open today? Gap summary.
Yeah, the gap status gives a good sense of the overnight sentiment carryover.
And the picture is pretty decisively bearish. The vast majority of these top 40 high-volume stocks open gap down. We're talking NVDA, TSLA, QQQ, the big ones.
So pessimism was baked in from the opening bell for most major names.
It seems so. The only significant names showing a gap up were mostly those defensive or inverse plays we discussed: SQQQ, TZA, SPXU, UVIX.
PFE also gapped up slightly, didn't it, despite the bad news?
Let me double check. Yes, you're right. PFE is listed as gap up as well. Interesting anomaly there, perhaps some initial reaction or positioning ahead of the news impact, but overall the gaps lean heavily negative.
Okay, what about the 200-day moving average? How are stocks positioned relative to that key long-term trend line?
This is where we see a bit of a split, and it's important. Despite the selling today, many of the mega cap leaders are still holding above their 200-day moving averages.
Like who?
NVDA, TSLA, QQQ itself, AMZN, AMD, INTC, they're all still above that critical long-term support level.
That's a really key point, isn't it? It suggests that while the short-term action is painful, the primary uptrend, the bigger picture for these market leaders, technically hasn't broken down yet.
Exactly. The structure is damaged, maybe, but not yet broken.
Yeah.
The selling hasn't pushed them below that long-term bullish threshold.
But there are names below it, indicating more serious structural weakness.
Yes. Key names trading below their 200-day MA include SQQQ, as expected for an inverse ETF in the bull market, PFE, which we discussed, IBIT and VITO, the crypto ETFs, NCLH, ENS, Matex. For these stocks, today's selling is compounding existing long-term weakness.
Any other interesting MA signals? Hourly crossovers?
The data flags UVXY as having crossed above its 200-hour moving average.
Yeah.
That's a shorter-term signal, but it adds more fuel to that volatility trade we talked about. Short-term momentum turning positive for volatility.
Okay, let's try to pull this all together. Synthesis and key takeaways from this midday snapshot. What really defines this session so far?
I think it's defined by sort of three main things. First, really high activity and conviction in the volatility and inverse instruments, UVAX, SQQQ leading volume, showing strong trends.
Right, the fear trade is active.
Second, these extreme valuation disparities highlighted by the AI's true value metric.
Yeah.
You have stocks like NVDA and especially RGTI looking incredibly stretched or overvalued based on historical norms.
While others like BTO, NCLH, ETHA are deeply undervalued, showing extreme price compression. Huge divergence there.
Exactly. And third, selective but strong buying conviction. The H trend flows in specific names like PLTR and UVX. Even while the overall market is down significantly, it's not uniform selling at all.
So the takeaway for you listening is that this isn't just broad market panic. It looks more like a violent rotation combined with some very sophisticated technical positioning based on these AI metrics. There's conviction on the short side, but also conviction in specific long opportunities or volatility hedges.
Yeah, that sums it up well.
Okay, final provocative thought. What's the most surprising or maybe tension-filled data point we leave people mulling over?
For me, it's got to be the prevalence of that extremely high daily true value status, the 145% for RGTI, 99% for NVDA happening while the major indices are getting hammered and big tech specifically is leading the way down.
Right. How can things look so technically rich or overvalued historically yet still be selling off so hard?
That's the core tension. It suggests that while the immediate price action is driven by fear, momentum, maybe valuation concerns hitting the headlines, the AI's underlying models, looking at historical price behavior, still see these levels as significantly elevated compared to past consolidation zones.
So it sets up a real dilemma for the afternoon, doesn't it? Does the short-term selling pressure, gravity, win out and pull these overvalued names down further? Or does the fact that some are becoming undervalued on the hourly charts trigger a mean reversion bounce?
That's the question. Will the short-term pain create enough of a discount to overcome the long-term overvalued signal from the AI? It's a fascinating technical setup heading into the rest of the trading day.
It really is. Lots to watch this afternoon. And once again, if you found this analysis helpful, please do hit that follow button and turn on your notifications. We do this every day to help you cut through the noise.